Hello traders, this is Frank Paul speaking with you on Saturday, November 10th, 2012. Thank you for joining us in this latest weekend complimentary video presentation. Over a many months long period, we've been using this opportunity to demonstrate the Fibonacci Swing Trader service, but because it is about to be superseded and replaced by FXM Trend Trader, we're looking forward now to the new and improved methodology and suite of resources to support it. So our pre-launch update here, all systems go. We're still looking for a launch a week this Monday. That would be Monday, November 19th. Everything so far is on track for that, all the pieces of the puzzle falling into place nicely. So barring any unforeseen difficulties, we will hopefully be able to announce that definitively later on this coming week. And so there you have it, FXM Trend Trader still on track for Monday the 19th. You can follow us on Twitter in the meantime. While at the Twitter site, just find us via our handle here at FXM Trend Trader or use this URL. And we are posting tweets daily to let interested people know how we're doing in terms of that launch target, and various dribs and drabs of information that kind of conveys what it's all about. And you can read back over, I think we've got over 100 tweets posted already over the past couple of weeks. How does the system work? As we mentioned to you in our example last week, one component is a 3-screen MACD histogram slope reading. We're looking for that sweet spot, for lack of a better word. It's not always long-lived, but it's usually pretty definitive when you've got the same MACD histogram slope reading. It's a 2-bar reading. Okay, backwards from the current open, you look at the most recent 2 closes, and you're looking for slope up or down. On any one time frame in isolation, that's completely meaningless. But when you line it up on 3 consecutive time frames, you tend to have a green light, so to speak, in terms of a direction forward. Now you have to temper that with proper analysis, which we'll get to in a minute. But in case it seems like a daunting task to perform this analysis, I just thought I would remind you that in the FXM Trend Trader suite of resources, we have this nifty tool called the Momentum Matrix, which gives you the 2-bar MACD histogram slope readings by those 3 different time frames for each of 25 different Forex pairs. I'm sure anything that you prefer to trade, barring the Norwegian krona or the South African rand or anything equally obscure, you're going to find it there. Now, as I mentioned, just because you get that strong trend reading doesn't mean it's actionable. We have to validate these readings with market flow analysis. And that is a discretionary form of analysis, something that we cannot automate. If I could figure out a way to get the MT4 coding to be able to read market flow on the charts, that'd be a bonus. We could probably let this thing rip as a robot, but we don't recommend it. Sorry, by robot I mean our EA tool, which is a semi-automation tool. Once you've found a trend reading, validated it with market flow, you turn the switch on, set the bias to long or short, and let it take over and get you into and out of the trade. If not using the EA tool, you can apply this thing manually. And the first thing to do would be to look for what we call a 5-minute validation signal. So let's say we have a bearish 3-screen MACD histogram slope. That means you'd look for the 1029 MACD on the 5-minute chart to be residing below the 0 line. That's all there is to it. It's a very simple visual. It's either yes or no. That's all there is to it, and you can figure it out in a second. Then with the 5-minute validation signal in place, you drill down to the 1-minute chart looking first for a very low level, I call it a micro correction. So the 1-minute MACD is going to give you a clue, if it's running counter trend, that one of these micro corrections is underway, and we look to trade its resolution when the MACD reading on the 1-minute chart resolves to the same side as on the 5-minute chart. We then get into the trade, apply the stop, and apply the limit exits. Again, you can use the EA tool that we've developed to automate that process. So all you really have to do at that point is look for a trend reading, validate it with market flow, and turn it on. Turn on the aid tool and it'll do the rest for you. Now last week we looked at a winning trade for Euro Kiwi short. We're going to look at pound Kiwi. I think the time frame for last week's example was actually the wee hours of Thursday, November 1st, if I remember correctly. So we're actually moving ahead a day. I admit this is a tiny bit repetitive because of the strong correlations that tend to exist between Euro Kiwi and pound Kiwi. So yeah, there's that. But anyway, the system is what it is. The setup is what it is. And to that extent, I think it's useful to look at this chart because we had a 4-hour downtrend continuation in progress, and that represents the market flow analysis piece that you have to do. You can't just react to indicator signals. That's not a wise approach. Then in the aftermath of the 4-hour correction, we get a bearish, I call it a 3M. We've been using the term triple screen up till now, inspired by Dr. Alexander Elder, which is the source for the information on a MACD histogram slope. That's where I learned about it from, Elder's Trading for a Living book. He uses a triple screen terminology, but I'm going to choose the slightly different term going forward, 3M. In fairness to Dr. Elder, he coined the term triple screen. I did not. I don't know if it's a copyrighted term, but I just want to avoid confusion. So we're going to call it 3M. 3 as in the number of time frames, M for momentum, all lining up the same way. It's less of a mouthful too. 5-minute bearish validation signal apparent as of 11 a.m. GMT. And then because we were not able to find a 1-minute MACD crossover, what we can do is use parabolic SAR on the 1-minute chart as a substitute. Okay, so if you just see a MACD reading on the 1-minute chart, it just rips and doesn't let up. You can simply use parabolic SAR, and in that respect, we found a low-level reversal as at 11:18 a.m. GMT at a price of 194.64. 20 pips stop at 194.84 all in, that is inclusive of dealing spread, was not triggered. And as you probably know by now, if you follow pound Kiwi and or Euro Kiwi, into the early part of this week at least, it was pretty much a continued downtrend. We had a bit of a spike reversal at one point on Monday, but aside from that, just a nice downtrend, and it was certainly worthwhile being on the short side here with the entry trigger we're talking about. So I'd just like to walk you through the charts really quickly. I cannot convey all of the detailed trading rules, but what I can do is convey the essence of the setup, the 3M trend reading, the validation signal, the entry signal, and also convey a little bit about how we exit the trade once we're into it. So let's do that. Let's take a look at the charts for pound Kiwi now.